It's showtime! Welcome to another exciting episode of Castle Title TV. As always, I'm your host, David Kramer, President and General Counsel of Castle Title. Today, we're going to be talking about a very important topic, Regulation Z. If that doesn't conjure up a song in your head of the B-52's Channel Z, I don't know what else will, but Regulation Z is part of the Truth in Lending Act of 1968. It's been around for a long time. It's a consumer protection statute designed to make lending more transparent, more truthful, so that your loan officer has to disclose certain things to you. And over the course of time, like every federal act, it's been amended numerous times. There are a number of changes and amendments that are set to become effective on October 1st. And I think it's important that you understand them just to get a sense of how this act is going to change, how it's going to affect our industry, and some of the pitfalls that you can look out for. So, with that said, I'm going to apologize in advance because usually when I do these episodes of Castle Title TV, it's right off the cuff. But today, obviously this is a bit of a technical statute, so I've got just a couple notes before me. But I will tell you that what I've done is I've linked all of the Truth in Lending statute, so you should be able to click on that link. If you desire to read the statute, I will warn you, it's very lengthy and quite boring. The next time you have insomnia, just pop that link up and bam, you'll be asleep like a baby in no time at all. I've also gone ahead and put up some of the notes for this episode that I'm looking at so that you can actually have in black and white some of the changes that we're talking about today. Because I think that if you're not aware of some of these changes, particularly if you're a lender, or particularly if you're going to be taking a loan and your lender is not aware of them, it ultimately could change your deal significantly. So there's really 5 main changes that we want to talk about, and we're going to want to highlight these right now. The first thing that we're going to talk about is the closing date. Okay? Closing cannot happen until 7 days after a borrower has signed off on certain disclosures. So, let me give you an example. If an application is taken with a lender on July 1st, strike that July 31st, the earliest that loan can close is on August the 7th. And that is if the application and disclosures are all signed in a face-to-face meeting. If you end up overnighting back the documents, that will bump up the closing day by 1 day. So it's very important that those disclosures be signed and returned as quickly as humanly possible. Okay? The next thing, and I think this is probably the most significant of the changes, is the calculation of the APR, or the annual percentage rate. If your loan officer misses the annual percentage rate that is estimated on your good faith estimate by more than 1/8%, or 0.125, by law under Regulation Z, your loan cannot close for a full 3 days after you've gotten a revised or updated good faith estimate. Now, what that ultimately means is that when your package comes out to your title company and they work everything up, if they catch a problem, it's going to delay your closing, which could ultimately create further problems for you if you're buying a home and you're going to have to bump the closing by 3 days, or if you're refinancing, because if there's a loan lock issue and you're right up against the wall, if you haven't closed it in time, you could be looking at having to pay lock extension fees, and then you and your lender are going to be going back and forth about who's going to be responsible for paying them. Frankly, I would say if your loan officer missed your good faith estimates APR, and that caused a delay and that resulted in a loan lock extension being required, I think that they should pay. But there's that. Okay? So, let's just give an example of changes in annual percentage rate. You receive your TIL, or Truth in Lending disclosure, on August the 6th in a face-to-face meeting with your loan officer as a result of the initial TIL being incorrect. The earliest your loan can now close is August the 10th. Suppose you receive it on August the 10th, but you have to overnight it back to your loan officer, now you're looking at August 11th. Think about how 3 days could significantly change the landscape on your loan, on your purchase. And also keep in mind, Sundays, holidays don't count. So it's not just 3 days, it's 3 days that's Monday through Saturday, and it's not holidays. okay? Next, there is a change in language, and just listen to this for a second. Initial till disclosure language will now read as follows. You are not required to complete the transaction just because you received these disclosures or signed a loan application. Lenders are going to love this disclosure. Why? Because that means that if they miss the mark and if they have to issue a new truth in lending, you don't have to close. You can say, just don't feel like doing the deal, and go away, and that's the end of the transaction, which really is a great incentive for your loan officer to make sure that they don't miss the mark, or if they miss it, it's by less than 1/8%. Number 4, upfront fees. And this is really important because I think there's potentially a lot of room for lenders to take advantage of this, but there won't be any more going forward. The only fee that can be collected by a lender prior to your receiving your disclosures is a credit report fee. That's it. And in most cases, that's going to be somewhere between $10 and $20. That's it. Okay? If the application is taken in a face-to-face meeting and the disclosures are provided in person, okay, then the additional fees can be collected thereafter. That would be an application fee, appraisal fees, and other fees that are necessary to get your loan to the table that you and your loan officer agree to pay in advance of closing. And lastly, I think this is extremely important, and frankly I'm surprised has not been the law up until now. Under Regulation Z, you are going to have to receive a copy of your appraisal 3 business days prior to closing. It amazes me how many times borrowers go to closings for purchases or refinances and they don't have their appraisal. They've never seen their appraisal. They don't see what comparable properties the appraisal is getting their value off of. And I think it's extremely crucial that you're paying for the appraisal, usually a couple $100, you should get to see what is in the appraisal. And right now many clients are asking their loan officers for them and are getting them from their loan officers, obviously because they've paid for them. But now it's not just a I'd like to have it, it's a you must have it. And if you don't have it for 3 full days before you're closing, guess what? You're not closing until you do. It's particularly critical. And so I think loan officers have to be cognizant of that, because if they just accidentally forget to give it to you through no intent of ill will, it again could delay your closing. So with that said, it's kind of a short episode today, but it's really important because again these changes are going to be going into effect in about 2 months, and I think it's very important that you understand how they work and how they could ultimately affect your transactions so that you could ask the right questions to your loan officer, or if you are a loan officer, you can change some of your business practices to be in compliance with these changes and be more effective at what you do. A couple quick housekeeping items. I cannot tell you how humbling, how much I appreciate all the great comments that I've received. Unfortunately, most of them are from emails and phone calls, and they're not things that the rest of you can see. I know that you're out there, and I know that you're watching. I know that you appreciate what I'm doing, or at least I believe you are based on the feedback I've received. Please put the comments right on tv.castletitle.com. When you watch the episode, click the comments button and add your comments. Next, many of you have signed up for the email list, and a lot of people signed up since the last episode, where I encouraged folks that weren't signed up to do so. But if you're not signed up, please sign up. It literally will take you seconds. Type www.castletitle.com. There's a subscribe box right there on the home page. Type your email address, hit submit, and that's it. It's that quick, it's that simple, and it's that easy to stay on top of all things real estate related. I only send out at most 1 email a day, and it's probably about 2 to 3 a week. But it is really important that you sign up if you want to stay on top of the title revolution. And with that, a little treat from my partner Brian. I haven't seen him for a while. Hopefully have him on a show soon. But in the words of Sammy Davis Jr., always leave him swinging. Until next time, we'll see ya.
You think that I'm in love with you, big boy. Don't put that on the internet.